All right, let's jump right in. Today, we're going to do a deep analytical dive into a really specific but super important tax situation: how to claim the credit for other dependents, what we'll call the ODC, for someone who has an ITIN, not a social security number. We're going to unpack the rules and procedures you absolutely have to get right. So here's our roadmap. We're going to break this down into 6 key parts. First, we'll look at the core problem. Why this credit even exists. Then we'll analyze who's actually eligible, how the application mechanism really works, what documents you need, and, this is a big one, the critical mistakes to avoid. And finally, we'll talk about the payoff for doing all this correctly. To really get the credit for other dependents, you first have to understand the specific problem it was designed to fix. And it all comes down to one simple thing: what kind of tax ID a person has. And this slide right here gets to the heart of it. It shows you the core cause and effect relationship. You see, the really valuable child tax credit, which is worth up to $2,000, demands a social security number. No SSN? That door is shut. So the tax code created a solution: the credit for other dependents. It's a $500 credit made specifically for dependents who use an ITIN. Now, we need to be really precise about what an ITIN is. It is purely, and I mean purely, a tool for federal tax purposes. It's for reporting and paying taxes, period. And honestly, what it isn't is just as important to understand. It does not grant work authorization, it doesn't change immigration status, and it doesn't make someone eligible for Social Security benefits. Okay, so we've got the why down. We know why this credit exists. The next logical question is, who qualifies? And it's not as simple as just having a dependent. There are actually 2 distinct layers of rules you have to get through. I want you to think of this like a 2-gate system. First, your dependent has to pass the standard IRS dependency tests. These are the same rules used all over the tax code. But then, and this is key, to get the ODC specifically, they have to pass a second, much stricter test. You have to clear both gates, or it's a no-go. So let's break down that first gate. For a qualifying relative, you're looking at 4 tests. They can't be someone else's qualifying child, you have to provide over half of their financial support, and they have to meet a relationship or household test. But the one that trips a lot of people up, the real showstopper, is the gross income test. If they earned $5,050 or more in 2024, that's it. The analysis is over. All right, now for the second gate. Even if your dependent sails through all 4 of those qualifying relative tests, this next rule is an absolute deal breaker for the ODC. The dependent must be a U.S. resident or a U.S. national. If they fail this one test, they are not eligible for this credit, period. It's a critical and honestly a kind of non-obvious requirement layered on top of everything else. Okay, so we figured out who qualifies. Now let's talk about the mechanics. How does this whole application process actually work? The most important insight here is that you are not doing 2 separate things. The ITIN application and your tax return are one single integrated submission. And here's the logic behind that. The IRS will only issue an ITIN if you can show them a valid tax reason. You can't just get one because you want one. So when you submit a tax return where you're actively claiming that dependent for an allowable tax benefit like the ODC, you're literally handing the IRS the justification they need. Your tax return proves the need for the number. So this is what that whole mechanism looks like in practice. Step 1, you prepare your Form 1040 tax return. Step 2, you prepare the Form W-7, which is the ITIN application for your dependent. Step 3, you gather all your supporting documents. And then step 4, everything, the 1040, the W-7, all the documents gets mailed in one single package to a special IRS processing center in Austin, Texas. That brings us right to the supporting documents. But instead of just giving you a checklist, let's analyze their purpose. What exactly is the IRS looking for? What are you trying to prove with all this paperwork? Your paperwork has to do 3 separate jobs. It has to clear 3 distinct evidentiary hurdles. First, you've got to prove the dependent's identity, who they are. Second, you have to prove their foreign status, that they aren't a US citizen. And third, and this is specifically for claiming the ODC, you must provide proof of their physical presence in the United States. This brings up a super common question and a huge potential pitfall. A lot of people just assume, well, a foreign passport should cover everything, right? But does it? And the answer is, not always. A passport is fantastic for proving identity and foreign status, no question. But, and this is a big but, if it doesn't have a US date of entry stamp, it completely fails to prove US residency. In that case, the passport is not a standalone document. You're gonna need more proof, like medical or school records, to clear that third hurdle. All right, this is probably the most actionable part of our whole explainer. Let's analyze the critical mistakes that get these applications flat out rejected. Because really, understanding the failure points is the best way to make sure you succeed. You have to hear this because the IRS tells you this directly in its publications, and it is a massive clue to a really common error. Just writing your dependent's name down on your Form 1040 is not enough. That action by itself doesn't actually create a tax benefit, so it doesn't justify issuing an ITIN. So here it is. This is the affirmative step, the one thing you absolutely must do. You have to physically check the small box next to your dependent's name that says credit for other dependents. The IRS even warns that a lot of tax software programs won't do this for you if there's no tax ID number. You have to go in and manually check that box. This is the action that creates the allowable tax benefit the IRS is looking for. So after navigating all these rules, all these mechanisms, and hopefully dodging all those errors, what's the actual result? What's the payoff for getting this whole thing right? The result is a $500 non-refundable credit for each qualifying dependent. And non-refundable just means it can knock your tax bill all the way down to zero, but you won't get anything back as a cash refund beyond that. It is a straight dollar-for-dollar reduction of the tax you owe. So getting the ITIN is the key that unlocks this $500 federal credit. But that leads us to a final really interesting question. What other effects does this have down the line? For instance, while an ITIN itself doesn't grant Social Security eligibility today, any earnings reported under that number could potentially be credited toward future benefits if that person's immigration status ever changes and they eventually get a Social Security number. It's just a powerful reminder that the tax system often has impacts that reach way beyond a single year's return.